Hi, this is Andy Hoffman of CryptoGoldCentral.com, the sound money blog of the 21st century, in which I write daily of my vision of the future of money, in which gold plays a passive role and Bitcoin is the center of the universe. Try my free 7-day trial membership and contact me anytime at ahoffman@CryptoGoldCentral.com to ask about the blog, arrange cryptocurrency or precious metal consultations, or get details on how to split coins, including B Diamond, Super Bitcoin, and Bitcore. In my one-on-one podcast series, I seek to learn of and share the viewpoints of the Bitcoin community's top thought leaders and entrepreneurs. All episodes, including this, the 21st, can be found at CryptoGoldCentral.com, on my Twitter page, at Andy_Hoffman_CG, and the World Crypto Network's iTunes feed. Just one day after my weekly episode, the must-listen appearance of Ken Bosak, I've scheduled an impromptu appearance by my good friend Mike Krieger, who not only is one of the earliest Bitcoin adopters, but like myself, worked on Wall Street for many years, giving him a broad background in the financial aspects of cryptocurrency. To that end, Mike, welcome to this special edition of One-on-One.
Hey, Andy, let's do this. It should be a fun chat.
Absolutely. Okay. Today, we're going to go full financial markets, as frankly, the crypto noise about how CME futures are taking over Bitcoin is deafening. Helped nonetheless by the scores of traders doing the same things I watched in precious metals for 15 years, i.e. claiming to be bearish short-term, but bullish long-term. In essence, enabling one to be right no matter what happens, whilst in the process scaring people away from the potential investment of a lifetime. Mike, let's start with your take on what has just happened in the crypto markets. From Bitcoin's run up to 20,000 in December, the altcoins' epic pump in early January, the crash thereafter, and recovery attempt since.
Sure. So, I mean, I think you've been someone that's been saying this on Twitter, which I think is a really good point. Which is, hey, remember we crossed 10,000 for the first time not too long ago, and I think that's something people are really forgetting, and it's really important. I remember when we first went above 10,000, I started actually feeling a little bit uneasy because it was such vertigo. It was going so far, so fast at that point that it was incredible, actually. And then the next thing you know, you blink your eyes and you're at 20,000, and then people just got too bullish. I mean, that's my view. But it's not just with Bitcoin. In late December on Twitter, and I rarely, make these big comments about the market. I only do it if I really, really feel strongly one way or the other. I started warning and saying that I wasn't going to buy anything in the space until I saw a bloodbath. And the reason was not because Bitcoin was at 19,000 or I felt like that was so insane, but it was some of the other stuff I was seeing in the space. I mean, what happened with XRP was, in my opinion, such stupidity. I mean, it was like the one of the dumbest things I've ever seen in any market in my entire career, and I've been watching markets for 2 decades now. And that was a sign to me. But it wasn't just XRP, right? If you remember, it was all these coins that were like had a valuation in the pennies. Everyone was buying the penny ones because, they thought it was just this, like, really, you were just having really dumb money coming in. And I was cautious. So to me, this pullback, this correction, it's not even that big in the context of Bitcoin. And to me, it's not surprising at all. So I don't worry about it at all. I actually think it's kind of healthy because I don't think it's good that you have people coming into the space that know nothing about Bitcoin, that have no idea why it's important, and are buying it because they believe it's a one-way bet. And that's what started to happen, not just with Bitcoin, obviously, with other coins. Too many people started thinking, I can't lose after 2017. And so that's not a healthy thing. It's not healthy for the space. It's not healthy for Bitcoin. It's not healthy for anything. So I actually think this pullback is just fine. I'm not surprised it happened. And I mean, if you want to talk about what I think going forward, we can. But that's my, everyone needs to calm down. People were expecting it to go straight to 100,000. It's just not how markets work. It's not even how Bitcoin works. So that's my view.
Right. Well, we will talk about what's going forward. Not that any of us can predict the future. When even a year ahead is long term, is still short term in my view. But yes, you talk about all the dumb money that came in. But the funny thing is, to me, that was the institutional money coming in. That was the wall of institutional money coming in and diversifying. And they need to diversify. They need to buy everything. And at the same time, you do have mom and pops out there and Koreans and that are just buying everything in sight and getting into the unit bias. Because in my view, 95% of altcoins are the equivalent of dot-coms that never have a chance to have a use case, but they are great for speculation. But on that note, okay, so going forward, I'm just curious what your thoughts are. And it's, of course, not what do you predict Bitcoin or any of these things will be. What do you expect at this point in the correction?
Yeah.
What kind of sentiment to set in and what kind of movements?
Sure. So first, I just want to kind of give people a thought into how my mind is working in this situation. You know, as you mentioned, I've been involved in Bitcoin for a long time. I've been through these before. You know, I've been through several crashes actually owning Bitcoin. This is, I think, the third like really, really major one, I'd say. And the way I see it, right, and the way I think other people should see it as well, is that you should have a view, right? You should have a fundamental view or a belief, right? And that should be your core feeling. And mine is that I'm a huge proponent of Bitcoin. I'm a huge fan of Bitcoin. I believe it's monumentally world changing. And yesterday I wrote this whole manifesto of all the reasons why I think it's important, not just the monetary aspects, but just freedom aspects. So I'm a huge, you know, I'm a bull, but at the same time, you really do need to take a step back and also say, okay, what are the possibilities? There are many possibilities here, and one of them is that we have to take into consideration is that we are in a period of consolidation, and that period of consolidation can last a while. Now, as you know, because I know you were watching Bitcoin back then, what was it, 2014 into 15? That was like that long bear market. I think late 13 into 15.
Yeah, Mount Gox until late in 2015.
Before the halvening, right? Before the halvening. So you know, you could be in a period like that again. I mean, we could be in a period where it's 2019 and we're at 12,000, right? Or 10,000. I mean, it's possible. And so, you know, you just need to kind of emotionally get, you know, prepared for that. You shouldn't wedge yourself to any view, you know, so you shouldn't say, okay, well, we're definitely going to go to 5,000 or 6,000 in some sort of bloodbath, and now I'm going to get long, or you shouldn't say, oh, you know, we're going to definitely go right up to 50,000. You have to kind of like put the probabilities in your head. In my view, I'm more or less pretty bullish at this point, at least let's say medium term. Long term, I'm definitely bullish, but like medium term as well. And part of the reason, actually, you mentioned sentiment. I actually think sentiment's pretty bad actually right now. I think a lot of people are expecting this move down, like one more big move lower. And I'm not saying we can't have it, but if I had to guess, I feel like we're going to have another big move higher before any sort of new low occurs. So I'm at this point, you know, personally, what I've been doing, I mentioned this the other day on Twitter, below 10,000, I was a buyer of some Bitcoin, and I, you know, I have my position from a long time ago. I don't really go in and buy all that often anymore unless it feels like a great opportunity. So that's what I was doing, and at this point, I'm just sitting on the sidelines. And if we get another huge drop down, I'm prepared to step in again.
Right. And sentiment, of course, is a function of inertia. It's just human emotion. I was just tweeting about it today because in my business, it's remarkable how, I mean, I do consultancies about like how to buy and store Bitcoin. And when the price was $15,000, $16,000, $18,000, I mean, I couldn't sleep. I had so many requests, but the price goes down to 10,000 and it goes down to zero because people, you know, that's human nature. They're always expecting if it's going down, it'll keep going down. And if it's going up, it's going to keep going up. But the fact is, when you look at it, as you say, fundamentally, and, you know, you take all the trading out of the way and you say, okay, the market cap is now $160 billion or so of something that has dramatically changed its position in just a matter of months between segment and all the things that have gone afterward. To me, $160 billion has become what $16 billion was 2 years ago. It's chump change. It's as cheap as it has been in the history of Bitcoin. I look around for FUD, which has been, you know, characteristic of Bitcoin forever. I don't see any. I mean, do you see any FUD stuff that really worries you?
Stuff that really worries me, no. I mean, I think, look, I'm fully expecting negative government headlines this year. I even wrote an article about that last year. But here's the big thing, right? And I know you talk about this a lot as well. Right now, I think today the stock market went up like crazy again, right, to new highs. Okay, so
when doesn't it?
Right, no, but it's getting really crazy now. I mean, this almost feels like the XRP rally of last year in the stock market. And so I don't know when things are going to happen within traditional legacy financial markets? No idea. But we both know, right, with $233 trillion in debt keeps growing. I mean, it's a limitless like appetite. The Swiss central bank has gone up 50% this year, right? It's a complete clown absurdity.
And on top of that, Mike, it's even more absurd because the headlines right now are currency wars, a crashing dollar, the potential end of the bond bull market. I mean, we're talking about some really, really difficult things going on. But, you know, we also know, as you said, with the Swiss, you know, laughing as they buy $100 billion of U.S. stocks, that stocks are monetized. I mean, that's what we've been talking about for years. So it's not like there's a central bank that's buying up Ripple, or maybe there is, but it would be unique in current times to see the powers that be lose control of legacy markets.
Well, here, and we discussed this last time. I mean, I think there's a reasonably high chance that, you know, the governments and central banks, they just, at any little sign of trouble, they just keep monetizing and quadruple down on the monetization. But actually, that's fine, because look how well Bitcoin has done throughout this entire stupid period, right? It's done extraordinarily well because people aren't stupid, you know, and more people are catching on, and young people are catching on. You know, a young person wants to go buy some fixed income security, you know, like, no, it's not going to ever happen. And so, you know, we could be in a situation, again, this is something people don't like to consider this, because people want things to be very binary, right? They're expecting this like bond market collapse, right? And deflation. You could have a situation where central banks continue to be completely insane for the next 5-10 years. And the cryptocurrency ecosystem just continues to get stronger and stronger and builds until one day you look around and that is the financial system. Right. And without a crash in the legacy markets, maybe even, you know, who knows how this plays out. But the point is this: the legacy financial system is finished. It is finished. There is that's the one thing that I can come here and say with a high degree of certainty. I can't tell you the path. I can't tell you if we're going to have a huge crash in bonds and then a crash in equities. It's certainly possible. I can't tell you if it's just going to be crazy monetization that then leads to crypto assets taking over time. But I am sure that 20 years from now or less, 10, you know, we're going to look around and the financial system won't look like it does today. It will be, we will have a different financial system.
And I couldn't agree more. I mean, because Bitcoin is so uncorrelated to the point where, you know, I have my Schwab stock icon here. I don't even turn it on anymore. I don't even look. It's like you're telling me the market's up. I don't even look anymore because I know no one's really paying attention to it. It's been commandeered by the 1%. I think the 99%, if anything, are starting to gravitate toward crypto. You know, be more aware of what the Bitcoin price is and what the Dow is. And I agree. I think stocks are done, and I think stocks and bonds are the anachronism because have been so abused, and it's going to be ICOs that may wind up taking their place. But anyway, I think we both agree there's no major FUD thing out there. Yeah, I mean, of course, there's government headlines. We've had plenty of them already. But, you know, China banned Bitcoin and no one really cares. And if the United States dared to do that, which I doubt they would do with the stock market doing so well, it would just be a signal to the world that they are worried about it.
Yeah, no, again, I've said this forever. You know, this is one of these things where if it was going to get stopped, it would have been stopped a long time ago. I mean, even with the internet, I heard for years, you know, right? Oh, they're just going to shut down no, they're not, and they didn't. What they are doing, though, as you know, is they're doing this like shadow banning and all these shady things with Google algorithms changing, you know, stuff to de-rank sites. Sure, okay, that is a form of censorship, but it's always, you know, people just live in this stupid fear of government. It really actually bothers me. It's like this weakness that people have where, you know, you see this great technology, you see these great advancements, you see people embracing it, you see how it can change the world, and then you have this group of people that just says, well, governments are never going to allow it. Oh, why are you living? You know, like why are you, what do you wake up in the morning just to be afraid of the government? I mean, it's just such a pathetic attitude, and it drives me nuts. So this is one of the things I love more than anything else about the Bitcoin community, is because so many people in there, like developers, these cypherpunks, they're just like, I'm just going to get to work. You know, I'm going to write code. I'm going to do my business. I'm going to change the world. And I don't care about the fear, about any of that. And that's one of the things I think, you know, I told you forever with the gold people that I just don't like is they're just a very fearful bunch. And Bitcoin is the exact opposite. It's brimming with optimism and doers and shakers and revolutionaries. And that's exactly what this planet needs.
And the funny thing about it is the people who say government will never let it happen the most are people like Peter Schiff and Jim Rickards, who don't understand that for years that was the issue with gold. The only reason that they let gold go on now is because no one cares about gold anymore. They care about Bitcoin. And again, people, they could be scared of the government all they want, but if they're scared of shutting down Coinbase, they'll go to local Bitcoins. If they're scared of the censorship at YouTube, they'll go to Steam it. I mean, people have the technology to do this, and they're going to, and that's why I have no fear at all. And I'm certainly not fearful of giant crashes, and I'm definitely not fearful of governments. Right now, I feel as positive as I've ever been, and I'm just trying to spread the word of positivity. Now, next, we're going to move on to technical analysis, the blessing and curse of financial markets. To the masses, it's plain and simple. If a technical expert tells you something, it must be true, even though until the advent of high-frequency trading and government intervention, the best traders were typically successful no more than half the time. Contrary to popular and completely uninformed belief, technical analysis is much closer to an art than a science, with one of the cardinal rules being that once a method is used too often by too many people, it becomes useless. To that end, Mike, given your vast experience in financial markets, what do you think of technical analysis, particularly in the Bitcoin realm? For that matter, without taking out your charts, what's your sense of the current technical picture?
Okay, a few things. First of all, I'm not a technical analyst whatsoever. That's not my process either. All the good investments I've made in my life, including Bitcoin, and I've had bad ones too, believe me. But Bitcoin obviously has been a good one, and nothing to do with technicals. I learned the story, I heard about it, I thought about it, I realized the potential, and I got long, and I didn't think about it. I didn't look at any charts really. But I do think technical analysis can be valuable, and people can use it. For all sorts of things, a lot of times to find out when to buy or when to sell, but that doesn't mean you can't have a view. So in other words, like I'm not going to have a, if I feel like the fundamental story for Bitcoin is positive, I'm not going to just be negative because someone, says the chart looks negative. That's not something I would do. However, I will sometimes use charts and volume, where I'm seeing the volume pick up, where I'm seeing the action, like reversal days, stuff like that, to figure out where the trend is changing, in one way or the other, or where I should be buying, stuff like that. But it's not look, here's my big message, and you sort of alluded to it. Don't look for someone else to tell you when to buy and sell, okay? It is the stupidest thing you could do. Just like you shouldn't be looking for a politician to save you. No person is going to be your savior in politics or in trading. You do the work yourself, watch the markets yourself, do the work yourself, understand your risk tolerance yourself, know how much money you're willing to put in yourself, and then make some decisions, and don't expect somebody on Twitter is going to be the sage to tell you, because look, I followed them all. I've seen them all. I think it's great that people are offering their opinions, but all these people are going to be wrong all the time. I'm going to be wrong. We're all going to be wrong. So, don't look for the sage to save you. It's just ridiculous.
Right. And I will say also that, again, you say they're trying to find the trend. The trend is always found in hindsight. It's like Alan Greenspan saying, I couldn't identify a bubble until after it burst. 90% of even the best traders will be saying, yeah, there's the trend. See, it happened. The trend changed. It's almost the odds of actually even being the best trader of finding when the trend turns, which is when it's most important, are almost nothing. And it's, what I've learned from watching so many analysts, again, I'm talking about 30 years now, or technical analysts, basically they say this: look, it's going down, so the trend is down, and it will continue to go down until the trend turns up. Essentially, so what they'll say is, if it crosses below this number, then it could go to this number. But if it doesn't, then it can go up to this number. So you're right each way.
Let me just step in. So the one reason, technicals, people do like technicals, and where they do provide value, is it tells you something potentially about the market that participants know, whales know, that you don't know. And that can be where it's interesting, right? Because if there are people with some knowledge, maybe of some crazy news out of South Korea or whatever coming out, they might use that knowledge and start taking positions. So just as an example, recently I've been watching the price very, very closely. And you want to watch, so we got down to what, 9,200 on Bitstamp, I think was the recent low. And then, we rallied up to, I think 13, and then down to 99 again, and another rally today to 10.2. But the interesting thing is you look at sort of right, those are higher lows there. I mean, that's a series of 2, 3 higher lows we've seen recently. And that's what a technical person might be looking at. The reason you're looking at that is because what you're seeing is you're seeing people are deciding to buy, right, at a higher level than before. And so that tells you a little something about the current participants, right? With the current people who are looking to build a position, where are they picking their spots? Where are they buying? So assuming there isn't any new fundamental news, you can sort of assume these levels are meaningful, not because of some magic, but because that's where actual human beings or computers, who knows, are buying and selling. And so that's where I think the technicals could be useful. But look, as you said, things look, if you get huge fundamental news tomorrow, the price is going to react no matter what the technicals say.
Right, in either direction, and that's why it's so silly, because almost every time when these things are talked about, the trend change, it's talked about in hindsight, because you never know. And the way I see it, I look at all of the whales in the world that are coming in, all the institutional money, and they have a 50% discount now. And I've talked about how for $200 million you can ensure that no more than 10,000 people in the world own more Bitcoin than you. That is, if you can get it at this price. There's just way too much interest, and I'm going to take those higher lows as my gospel for now. Maybe I'm wrong, but I have my position. I don't need to change it, but I believe very strongly that the fundamentals here are as powerful as the technicals, and we will see what happens. So we're going to move on, lastly, in this abbreviated 101 special, to the big pink elephant in the room of whether CME futures are a net positive, negative, or neutral in the Bitcoin market. Meaning, does the benefit of their legitimizing Bitcoin to the mainstream outweigh the potential for government-led attempts to suppress the price, as they have been doing in precious metals for 4 decades? To me, the temporary peak at $20,000 was more due to front-running the December 20th futures contract launch, that and hundreds of crypto hedge fund launches January 1st, than the futures market itself causing price declines. Mike, let's get this discussion started with your take on why prices surged and plunged at the time of the launch, and what, if anything, it means.
Okay, yeah. So I see a lot of people saying like, oh, look, see, I mean, the CME launched here and Bitcoin crashed. I mean, listen, there were a lot of things going on at that time. It wasn't just the CME. For example, as I mentioned earlier, I was very vocal on Twitter saying that there is insanity going on in the space. And you had the XRP moves and you had all these so it wasn't just the CME. You had a crazy little insane run in everything, and it was extremely frothy. And if you look at certain things, like, I don't know, if you've looked at this Mayer multiple, Trace Mayer multiple.
Yeah, I wrote about it today. Yes. Okay,
so it's an interesting thing, and I think that's actually sort of a useful thing to use, when you're thinking about your buy and your buy and your sell entry exit points. But that was extremely stretched, right?
And if you can go over that is basically the Bitcoin price divided by 200-day moving average, which right now the long-term average is like 1.5, and we're down to 1.65 or so today, but it had gotten to 4.2 at the height in December. Yes.
Exactly. So it's not like anyone who's saying, oh, well, the CME launched and look what happened to Bitcoin, without also pointing out stuff like that, the fact that the market was extraordinarily overstretched, and it was, is missing the point. So that's how I look at it. I'm not paying I don't care. Look, I don't want to hear these theories about the CME. I think it's ridiculous. Now, of course, there could be short-term manipulations, and you can even argue that that's going on now. But anyone who's spending more than 2 minutes freaking out about the CME and worrying about it, get out of Bitcoin. There's no business for you to be in there. It's ridiculous. If you think Bitcoin is so weak that the CME futures, cash settled futures, is going to stop the rise in Bitcoin, if Bitcoin is successful, then you don't know. You have no business being in this. Like, it's ridiculous. The other thing is, if you want to compare it to gold and silver, there's no comparison. Bitcoin is extraordinarily easy to physically get your private keys. It's like, it takes no time, no effort at all to get your coins from an exchange and send them to your hardware wallet. This is the complete opposite of the gold market, the silver market. It's extremely not a physical market, and it never will be, because it's too difficult to get delivery. Who's going to do that? It's a flip of a click of a mouse with Bitcoin. It's a huge process with gold and silver. And so gold and silver are markets that are very, very easily manipulated, and they probably always will be. And that's part of the reason why when I first learned about Bitcoin, I got so excited about Bitcoin, because when I understood how it worked, I understood that no matter what they tried to do, you can't manipulate Bitcoin in a major way unless you're actually willing to sell some actual Bitcoin.
Right. And some of the things I always bring up, first of all, when the futures market started with gold and silver, it was on January 1st, 1975. And I kid you not, it's one day after gold and silver ownership was re-legalized for the public. And if you see the cables that were uncovered by WikiLeaks, you see that all the chat between the Federal Reserve and the Bank of England about how, quote, we created this bank to create volatility to dissuade hoarding. And it's, I mean, so this is stuff that's out there in the public now. And it's stuff that I watched for 20 years of my life. It is manipulated for purpose. And remember, governments own gold and silver. Now, we never know exactly how much they own because they lie about it. They never have it audited. They have complex swaps and leases and derivatives, so you never really know. So there's always that overhang out there, and they have the CFTC in their pockets. Now, in Bitcoin, governments don't own anything. The U.S. government doesn't own a single Bitcoin, neither does the European Bank. Right. Probably the Bank of Japan does, but they have different goals. So there's a complete new, different dynamic going on in here. Plus, you have the blockchain, so there's a lot more transparency. So I don't believe for a second that the futures can do any harm. And I'm really having this call, and Mike is I think Mike's agreeing with me that you definitely shouldn't be worried about the futures markets because it's such a small part, and it's such a small market right now compared to the gold and silver. And
here's how I look at it too. Look, if there is manipulation going on, and I'm sure there is, because every market has manipulation in it. It's just a matter of degrees and who's doing the manipulation. So with Bitcoin, though, it's much harder to, because it's not based in this fiat world. It's not based in this extremely, right? Like gold is so, people like to say, right, gold is outside of the system and, right, not related to the financial system. And it's true that if you hold physical metals in your hands or at home, then you don't have the counterparty risk, right? And so in that sense, it's disconnected. But in every other sense, it's extraordinarily connected.
Plus, even if you do have it in your own hands, how are you going to get rid of it? Like if there were no coin shops, what are you going to, place a Craigslist ad?
Right, but the bigger point, like, that I'm trying to make is that, as you mentioned, central banks and governments, they've been hoarding gold forever, and so it's just by its nature, it's going to be very intertwined in the financial system, because all these players, right, status quo players, own gold, and so they can use that, and they do use that, and that is a huge thing. Look, all the gold, pretty much most of the gold ever mined, is around still. And so who owns that gold, right? I mean, we don't know. We really don't know. We don't know how much the U.S. Treasury owns. We don't know how much Russia owns. We don't know how much China owns. We don't know how much the banks own. We don't know any of that. And therefore, it's probably there's probably a huge amount of gold in all sorts of hands that you have no idea about, and therefore their ability to control the market's easier than with something like Bitcoin, where that's just not the case.
Right. So I guess the moral of the story is, for people listening, is that the fundamentals are fantastic. The technicals have a use case, but only a limited use case. You need to look at the entire picture, and certainly not to get too devoted to any one person or people or indicators in the big picture of things. And as for the futures, I think we both agree, as people who have not only been in the financial markets a long time, but have deep knowledge of the futures markets and how they have worked in the precious metals realm, don't worry at all. It's just one of many factors, and not one of the ones that are even on the top 100 on my list. So with that, we'll conclude today's podcast featuring one of the alternative media's most well-known political, financial, and social truth warriors, Mike Krieger. Follow him at Liberty Blitz, read his free blog, libertyblitzkrieg.com, and donate to him via the Bitcoin address in the show description below. As for me, please check out the free 7-day trial membership at cryptogoldcentral.com. Sign up for a full year for $225, or contact me about cryptocurrency and or precious metal related consulting sessions at ahoffman@cryptogoldcentral.com. Thanks, and have a great crypto day.
Thanks, Andy.